Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. Today's guest is the CEO of Skyharbour Resources, Mr. Jordan Trimble. Jordan, thank you for coming and welcome.
Yeah, thanks for having me. Looking forward to this chat.
Thanks. Let's get back in time in your beginnings. How did you discover? How did you enter the uranium journey, and how did you become CEO of Skyharbour Resources?
Yeah, so I've been in the industry, the mining industry, for almost 13 or just over 13 years now. So I came fresh out of college with a science and business degree, and I started working at a gold company called Bayfield Ventures back in 2010. And it was fortuitous at the time, given the market was coming out of the financial crisis, and gold was performing very, very well. The company was run by the chairman of Skyharbour, Jim Pettit. So Jim and I have worked together now for well over a decade, and Jim was the CEO of Bayfield. He built a great project portfolio, including several gold projects in Ontario in the Rainy River District. Made a discovery in 2010, high-grade gold discovery, adjacent to a large multi-million ounce gold deposit called the Rainy River deposit. Now this has become a mine, and it was actually the extension of the deposit that we discovered on what was called the Burns Block. So I was there from really kind of the early days pre-discovery, or around the time of the high-grade discovery, right through to a resource estimate, and then ultimately the company was acquired by New Gold, who is now mining that deposit. And so I saw the kind of the full discovery process, right through to acquisition with Bayfield, and we had success with that. And during that time, I was involved with a few companies. I was the corporate development manager for Bayfield at the time, but I was involved with a few others as well, just kind of building my career. I was also at the time, I got my CFA charter, wrote the exams, ended up getting the charter, and then I got quite involved with the board, and I served a full 6 years on the CFA Vancouver Society board, volunteered and kind of built out my network as well through that. But the reason I bring all this up is that ultimately led to my position now as the president and CEO of Skyharbour. So as we were in the process of selling Bayfield, we had Jim and the group that I was working with had really what was a shell company at the time, Skyharbour. It did have a few legacy projects in Ontario, some precious and base metal projects, but it was a $1.5 million company looking for a direction. This was back in 2013, and so I came in and took over as the president and CEO, raised some money initially for it, and teamed up with a group out of Saskatoon, a geological group, which, funny enough, had just sold a uranium company called J&R Resources to Denison Mines, who I believe you've just done an interview with. Dave Cates, who's the president and CEO of Denison, is on our board. It's kind of come full circle here. They're our largest shareholder. They own just under 8% of Skyharbour. But the J&R story came to an end with Denison acquiring them in 2012. The two geologists that ran that company, Rick Kazmersky and Dave Biard, Dave's now our head geologist at Skyharbour, were fresh off of that sale. And I reached out to them and said, look, it's a depressed uranium market. This is a very contrarian opportunity. I'm going to be running the company. I have a vision for it. Let you guys know the Athabasca Basin very, very well. They've been credited with several discoveries, very, very reputable exploration geologists, both ex-Cameco, and then ran J&R and had success there. J&R, through the 2000s, they took it from a $5 million market cap to over 400 million in the mid 2000s, which I'm sure we'll talk a little bit about the cycles, but that just shows you, how exciting this industry can be. And I will note too, we have several of those projects that were the base for that $400+ million market cap in 06, 07. We've since reacquired and brought back into Skyharbour's project portfolio, along with a number of other properties. So, there's very strong re-rating potential. But I got into it, as I said, teamed up with Rick and Dave and our geological team in Saskatoon. And we basically went out in the early years in 2013, 2014, 2015, started building up the project portfolio. At that time, investors that have been through these cycles will know it was a very challenging few years for not just the uranium market post Fukushima, but for the entire resource and mining market. And so that afforded us, though, the opportunity to acquire these projects for pennies on the dollar. And we were very opportunistic and aggressive. We were able to build up the initial asset base in those first few years. And then we also were following some of the recent discovery stories quite closely. And that was another, in addition to the contrarian opportunity that I saw with the uranium, that we saw with the uranium market, there were a number of notable new discoveries being made using some new exploration techniques and methodologies, notably NextGen at Arrow, Fission at Triple R, and previously you had Hathor, which was acquired by Rio Tinto, and actually one of their projects in that portfolio, in the Hathor's portfolio, Russell Lake, is now we now have option from Rio Tinto. But there were some notable discoveries and serious value and wealth creation happening while the uranium price was stagnant to down. So we viewed it as an opportunity to, one, take advantage of a contrarian opportunity, build up an asset base, but also then go into these projects and use some of these new techniques that had worked and led to these discoveries, these, in the case of NextGen, multi-billion-dollar high-grade discovery. And so we're out there now as a high-grade uranium exploration and early-stage development company with one of the largest land positions, over 500,000 hectares across 24 projects. The two main projects being Moore Lake and Russell Lake. And then we have secondary and tertiary projects that are part of our prospect generator business. But ultimately, our goal as an exploration company and part of our business being prospect generation is to offer investors exposure to a new high-grade discovery, as well as resource expansion, because we do have at several projects, small deposits, uranium resources. And we can talk more about what we have, our plans on some of those properties. We are excited now with the prospect of coming into a better uranium bull market. And then again, hopefully delivering a notable, meaningful high-grade discovery when the uranium price is moving from the bottom left to the top right and not the other way around. So that's the quick history of the company. Needless to say, the company's, it's been around now as a uranium company for 10 years. So, we've from the early days where, we had staked and acquired a few earlier stage projects, we've obviously grown that portfolio. As you and I have talked about a little bit offline, we're actively advancing our two main projects, Russell Lake with a 10,000-meter drill program, and Moore Lake with a resource estimate. And then the other projects, as I mentioned, the other 22 projects have either been optioned or JV'd out, or we're actively looking to find partner companies to come in on the other ones that we own 100% of.
Yeah, I got to hand it to you. I remember when your company was one project company, and when you look at the map today, it's very impressive what you achieved. What kind of properties do you have? And basically, the most important thing, on which kind of positions, strategically positioned projects in the Athabasca. Really great work, Jordan. I would like to ask you, does your company have a longer term plan to maybe to change the business model from a prospect generator to more of explorer model that has 3 or 4 projects that you will that will be in your focus, and maybe the other properties to spin out to another company, or maybe even sale to do a sale of those properties? Is there another approach here? I mean, in the long term.
Yeah, I mean, look, it's a great question. I do get asked this a lot, and I like to use the opportunity to kind of bring people back to, we are an exploration company first and foremost. I mean, really our main value proposition and business is, making discoveries, delineating resources, de-risking these deposits at projects that we're the majority owner at, and then ultimately our end goal would be to be acquired, right? Working towards the sale of a company, hopefully post exploration and discovery success, as well as in a much better uranium market. But that is our main focus. And as I mentioned earlier, we have the two main projects of Russell and Moore Lake, which are adjacent, collectively representing just under 110,000 hectares of prime real estate in the eastern part of the Athabasca Basin.
Yeah.
Most of the ground between the McArthur River Mine to the north and the Key Lake Mill to the southwest. And then Denison, again, our largest shareholder, their flagship project, Wheeler River, we effectively encircle it to the north, to the east, and to the south. Most of the drilling that we're carrying out at the Russell Lake project at 10,000 meters that we're carrying out there, and again, we'll have lots of news flow and assays pending on that in news flow over the next few months. But a lot of the drilling that we're doing, these initial targets that we're testing are within a few kilometers of the property border, and Phoenix, the main deposit at Wheeler River, is just a few kilometers from our camp and from our property boundaries. So those two projects, and Moore Lake, as I mentioned earlier, project that has been the flagship, it's now a co-flagship with Russell Lake, adjacent to Russell. We've done a fair bit of drilling over the last 6 years since we acquired that project back in 2016. It's generated some very, very high-grade drill results, 21% U3O8 over 1.5 meters. That was within 6% over 6 meters. More recently, we've drilled a little bit deeper, testing new targets in the basement rocks, and generated the highest grade results from the basement. So that's 7% U3O8 over 2 meters. We announced that just in the last few years here, and it's open at depth and open along strike on that There's a 5-kilometer long conductive uraniferous corridor that's only really been systematically drill tested for about 3 kilometers, and certainly hasn't seen much drilling at depth in the basement rocks. So there's still a lot of upside potential at our Moore Lake project, but given the drilling right now is focused at Russell as a part of our earn-in with Rio. That's where we're focused with the rig, but we are working on a resource estimate at Moore Lake at the Maverick zones. There's several high-grade zones of mineralization, so that'll be a big milestone for us in the coming months before year end, is a proper 43-101 there. So those two projects we own, or we're earning into a majority interest into. We own 100% or more. We can earn an initial 51% stake in the Russell Lake project. We'll likely have that complete by this time next year. After this 10,000 meters, we'll have about another $1.5 million to $1.6 million at most that we'd have to spend in exploration. So that'll probably be in the form of a 5,000 to 6,000 meter follow-up drill program, either later this year or early in the new year. That'll get us the 51%, and then we either can lock in the 49% being with Rio Tinto, one of the largest diversified mining companies in the world, and now a large shareholder of Skyharbour. As a part of that transaction included some stock, or we can move to 70% and ultimately buy them out at 100%. So these are the two main projects. That's where we're looking to deliver high grade new discoveries, expand resources, and ultimately offer investors exposure directly to these more advanced stage exploration projects without bringing in partner companies like we have at the other properties. Now, to address the prospect generator business, yes, this is an important secondary part of the business. It's grown quite a bit as you've been following. It's evolved quite a bit over the last 3.5, 4 years. It was initially two projects that we JV'd out or optioned out in 2017. Our Preston project to Orano, France's largest nuclear and uranium mining company. We're now a joint venture partner with them at that project. They have a 51% stake. And then at the East Preston project, now majority owned by Azincourt. We have a minority stake in that project, and Azincourt's been quite active exploring and advancing that project. But if you look at the more recent option agreements that we've announced since basically late 2020, early 2021, we've announced 6 new option partners over the last few years. And so these companies are all still actively earning in, making their annual cash and share payments, and then funding entirely the exploration at these projects. So it's a great complement to our main projects and the work we're doing there. We are expecting of those 6 active earn-in option partners, 3 or 4 of them should be drilling or carrying out significant exploration programs within the next 6 to 12 months. It'll generate a lot of news flow here going forward. And it's you can think of it as having multiple irons in the fire. If one of these companies makes a major discovery at one of these projects, yes, we don't own 100% of it, but we'll have a minority interest. Typically speaking, we structure it where we try to keep a minority interest in the project. We may even have an NSR on the project, and we typically do hold equity in the company. So it just gives us and our shareholders exposure to multiple assets, multiple operators, and usually multiple programs being carried out.
I see. Beside those 2 of your flagship projects, what other projects will have your attention in the next 12 months? I mean, some work done on them, and do you have some budget on some other properties beside those 2 in the next 12 months?
Yeah, it's a good question. The focus is going to remain as it stands right now on Russell and Moore. And Russell, as I mentioned, this 10,000 meter program, our initial inaugural program at this project is significant. And we saw an opportunity. It took us a little while to get the deal done, but when we finally got it announced and closed last year, we then worked to basically refine all the drill targets. There's been lots of historical exploration and drilling by previous operators, but a lot of that was reconnaissance or exploration drilling, widely spaced drill fences. So there's a lot of very interesting, relatively untested targets whereby you go in and you do more systematic infill drilling between widely spaced drill collars that in some cases have mineralization on both sides, on both fences. And so, you go and you can miss a lot of uranium in just a few hundred meters. So that's one of the strategies that we're employing right now in this initial drill program. But as I mentioned earlier, we're already planning a follow-up 5,000 to 6,000 meter drill program either later this year or early in the new year. So that will be, the source of a lot of news flow, and most of our drilling will be focused at Russell Lake over the next, 6 to 12 months. Moore Lake, we are planning some additional drilling there. So Russell Lake, fortunately for us, came with road access. The road that services the McArthur River Mine runs through the project, power, but also a 40-person exploration camp at Russell. And that's a huge asset to have for us, specifically because we can stage out of there, obviously, for the drilling at Russell. It's brought our drill costs down below all in $300 Canadian a meter, which, if you look at some other projects that are more remote, fly in, fly out, you're looking at $500-600+ all in a meter for some other exploration projects. So we were able to drill, we get a lot of bang for our buck, but it also benefit us when we go to drill more at Moore Lake, that we can access Moore Lake and the main target areas from the camp and from the road that runs through Russell Lake. So that should bring our exploration and drilling costs down at Moore Lake as well. So yeah, we are planning some additional drilling at Moore Lake. However, in the next, call it several months between now and year end, we're working on this resource estimate. We're also internally looking at a little more closely, looking at the potential for ISR or SYHBR as a potential mining method, given the high-grade mineralization at the Maverick zone, or several zones of mineralization at Moore Lake could potentially be conducive to one of those two mining methods. It's relatively shallow, mostly sandstone hosted, right at the unconformity. So that's something we don't have any economic assessment or reports out on that. So, but it is something that we are going to be looking at a little bit more closely in conjunction with the official resource estimate. And then to answer your question with the other project, so yeah, we'll probably, I mean, it's contingent on a number of things, but we will likely carry out a little bit of work on some of the other projects that are in the prospect generator portfolio that we haven't optioned or JV'd out yet. You know, a good example was we did a little bit of work at our South Falcon project a year ago, and basically prepped it to get ready for a new partner to come in. And if you've seen recently, just in the last few months, well, call it the last 6 months, we've now completely optioned that ground out. The first one being South Falcon East, which was our largest option agreement with Tisdale Energy, upwards of 22 million in combined exploration and cash and share payments. And then more recently, we optioned the western part of the property called South Falcon to North Shore Energy. And having done a little bit of work on the project last year helped us to get those option agreements and those partners in. So we may look to do a little bit of work. We just did announce new acquisition with Denison at the South Dufferin project. We own 100% of it. That is a project we will look to option or JV out.
How is your cooperation with Denison? Can you expand a little bit on that? Do you often agree on things? How is that cooperation going?
Yeah, look, Denison's been a strategic partner and shareholder since 2016. You know, we are extremely fortunate to have them as, you know, they're a much larger development company and laser focused, obviously, on building, you know, the next producing uranium mine in the Athabasca Basin at Wheeler River. But yeah, no, we've built a great working relationship. Dave Cates is on our board. He's the president and CEO of Denison Mines. He personally is a large shareholder. He's added to his position in the last year and a half. I mean, you'll see that with our insiders. You know, we've been actively adding to our positions here in the last several years, and so there's good, strong insider buying, and Dave's a part of that. And yeah, I mean, look, it's great also to you know, have them you know, bounce ideas off of them, you know, work with them on several projects, and we've obviously done a number of project deals with them. We also signed an exploration agreement with the English River First Nation at our Russell and Moore Lake projects, and you know, Dave and the Denison team helped us through that, and that was a big milestone for us, and so yeah, no, look, it's a great partnership. It's a big vote of confidence and endorsement for Skyharbour, and you know, Dave and the team there have done a phenomenal job building Denison up to you know, be a near-term producing story.
Yeah, definitely. Jordan, one question: when you are acquiring other projects, let's say greenfield project, and you are not staking land, you are acquiring. What metrics do you see as an important? What kind of due diligence do you do when acquiring those kind of projects? What metrics are important in that story?
Yeah, I mean, that's a good question. You know, our geological team, obviously, that you know, that's the first thing you look at, is you want to make sure there's good geological potential. And so Dave Bayard Christine McKechnie, who head up our geological team in Saskatoon. As I mentioned, both Dave and Christine were ex-Cameco. Dave's been looking for uranium in the Athabasca Basin for almost 40 years, made multiple discoveries. And so, they know what to look for. There's a number of other, obviously, variables and things that you look at. One being accessibility, that and the infrastructure, that there's been cost inflation in the industry with drilling and with everything associated with exploration. So having that's why I bring up the infrastructure near Russell and more, because it really does matter for exploration companies. So that's another one. You want to also take a look at the claims, the status of the claims. So their mineral tenure, the mineral claims. They've had lots of historical exploration. You build up assessment credit on them. If they don't, you have to spend $15 per hectare per year to keep these claims in good standing. And so that's one of the I think takeaways for Skyharbour's portfolio of projects is, yes, we do have a big property package, over 500,000 hectares. That's over 1.2 million acres across 24 projects. And they range from earlier stage exploration properties right through to more advanced stage exploration assets like Moore, like Russell, like South Falcon. South Falcon has an NI 43-101 resource, inferred resource. Moore Lake, we're working on one. And these projects have high grade uranium and historical drilling, and lots of historical drilling. So, we've got the full, call it, spectrum of exploration projects. But the other great thing in our portfolio is, especially the kind of more advanced stage projects, the claims are in good standing for years and years to come. So we're not on the hook to spend a lot of money to keep these claims in good standing. And then that's also a benefit of this prospect generator business we've built up is, these projects that we've optioned out, it's typically a requirement on the optionee to keep the claims in good standing. So they have to, not only do they have to fund the exploration and pay for the work, but they're required to make sure that the assessment credit is filed and that the claims are pushed out. And so that's a big thing to kind of keep an eye on for exploration companies, and I think gets overlooked. So there's a long criteria list. For us and our recent acquisitions this year, we've staked ground. Even recently, we've continued adding through staking, which is getting more difficult to do because the basin's filling up with more companies. And
that was part of my next question. Is there any land still for staking?
There is, but it's getting more and more marginal. There'll be claims that open or lapse and then open back up, and we've been a part of a couple of those kind of reopenings, and it's competitive, right? It's not like it was 4 or 5 years ago. So the days of going in and staking and acquiring these big tracts of land relatively inexpensively, those are long gone, right? I mean, you had to be there years ago to be able to do that. So, that again, that's a part of our prospect generator business is we were there. We have built up this project portfolio, and we've got another 13 projects in the portfolio we own 100% of. That in the case of a South Dufferin, which we just acquired from Denison, it's drill ready. It's a more, call it, advanced stage exploration project, but we can offer new companies or companies that are already active in the basin that are looking to expand their portfolios. We can offer those prospective projects and properties for them to go work on.
One question about drilling costs. Do you see them declining, rising? How much are you paying for those drilling rigs right now?
Yeah, they were rising over the last few years in line with inflation and obviously fuel costs and camp costs, geological costs. I think that at least we're seeing it kind of taper off, and that was, as I mentioned earlier, that was a part of the strategy in purpose in the Russell Lake acquisition or option. Was it provided us with access to the infrastructure that basically really helped reduce our drilling and exploration costs. So I think you'll see it as inflation is coming down. you will see the exploration and drilling costs come down as well from where they have been the last year or two.
Okay, can you expand a little bit on share structure and skin in the game? You already mentioned the skin in the game. Let's start with the share structure. How many shares do you have outstanding, options, warrants, and what percentage does the management own in the company?
Yeah, so issued and outstanding, there's about 160, just under 162 million shares issued and outstanding, fully diluted. It's about 192 million. We've had a fair number, few warrants exercise that were in the money over the last couple of years. We're coming to the end of those, the in the money warrants, so that's good. Obviously, it brings some cash in, but can be a bit of an overhang. So that's mostly behind us now, which is good. We haven't actually had to do a hard dollar financing or raise in 3 years now. I believe August of 2020 was the last time we went to market to raise a hard dollar. We have raised money through flow through and then more recently the critical metal flow through. That's funded the drilling and the exploration that we've carried out at Russell and Moore Lake. But that's been a big benefit from the prospect generator business, as I mentioned, is having stock and cash come in from these partner companies. And as I mentioned earlier, we've got across these 8 partner companies, 2 of them are JV, so they completed their earn-ins, but there's 6 active earn-in option partners. These 8 agreements total to over 85 million in combined exploration expenditures, cash, and share payments. About half of that in exploration and the other half in cash and in stock. Now, that's assuming, the caveat being, that's assuming all these companies complete their earn-ins, which that time will tell. But it's a great way to generate some extra cash flow and bring some money in on an annual basis, especially in weaker markets when you don't want to have to keep raising a ton of money to fund lots of exploration. And so that's been key. And just as I think I mentioned in the next 24 months, assuming that these partner companies complete their earn-ins, that would be upwards of over 10 million in cash and stock that would be coming in from these partners. Now, even if it's a fraction of that, that covers G&A, that covers new acquisitions, potentially some of that, and we can put some of that towards future exploration as well. So that's the capital structure, the treasury, and we're fully funded for the exploration that we're carrying out right now. Now, some of the larger shareholders and the shareholder base over the last several years has shifted from a predominantly retail shareholder base to more institutional and corporate in the last several years. And the 2 larger corporate strategic shareholders, Denison, as I mentioned, they're our largest shareholder. But just in the last year, Rio Tinto has become a large shareholder with the project deal at Russell Lake. And then we've got a number of the uranium mining ETFs that we're in, URNM, both of the Sprott ETFs, actually, the junior ETF as well, and then the Global X URA. And then a number of institutional investors and shareholders that have participated in financings and have built up positions in a number of the uranium-centric funds, as well as other smaller resource funds and some family office money as well. So we're between the insiders, management, and corporates and institutional shareholders. We're probably, that group collectively is probably close to 60%, 55 to 60%. So we still have a strong retail base, which I think is important. But the company's growing, and I think certainly with a rising uranium price and success at the various projects, I think there's in the next few years there's a lot of potential to see much higher prices.
Agreed. You touched on cash. How much cash do you have in the till?
We've got about 4 million in cash and in stock currently. Now, again, we are, as I mentioned, we will be receiving again, depending on the various option partners and if they complete their earnings, that would be, you know, over 10 million in the next 24 months, assuming that they all complete their earnings. So even if it's, you know, a third or half of that, you know, that's a significant amount coming in.
Okay, a final question. Can you tell me more about your team?
Yeah, so we talked a little bit about my history, and you know, I come from more of a finance and an entrepreneurial background, and been running Skyharbour, you know, since really day one as a uranium company. My head geologist, Dave Villard, who heads up our team in Saskatoon, I talked a little bit about him, ex-Cameco, and then built and sold JNR. Joined us. Christine McKechnie, who's worked with Dave and worked at Cameco previously, as well as a senior project geologist now. And so the two of them lead things in Saskatoon and kind of oversee all of the exploration and drilling and programs in the field. We brought on several new and junior geologists, Sean Cross and Dylan Drummond have joined us recently, and you know, they have histories working in the Athabasca for, you know, NextGen and several other developers, and so we've added to our geological team as you know, we've been more aggressive in the last few years with our exploration, our drilling, as well as building out the prospect generator business. So that's on the geological side. My chairman, Jim Pettit, who I also mentioned earlier, ran the gold company that we built and sold. He's a 35 plus year veteran in the industry, and him and I work here in Vancouver together. Dave Cates, a director who we talked about. Joe Gallucci, also an independent director based in Montreal. He's the head of investment banking at Laurentian Bank. So he's got lots of capital markets experience. He's worked with lots of uranium companies in the past. Great addition that we added to the board several years ago. And then just rounding out the team, more recently, we brought in a full-time senior VP of corporate development, Andrew Remcharin, joins us with over 20 years of mining experience. He was at Sprott, he was at SRK, and he also was the corporate development manager at IM Gold for a number of years. So he's got lots of years under his belt in the mining industry. And then Paul Matizik as well, a strategic advisor, well known in the industry, and several other notable names on the advisory board. So a good mix of focused uranium exploration expertise in the Athabasca Basin in northern Saskatchewan, with our geological team, coupled with capital markets and managerial experience with several of our officers and our board.
Jordan, sorry, this is the final one. 30-second answer. Where do you see Skyharbour in 5 years?
Well, I you know, as I said, our end goal would be an acquisition, build it up, and you know, hopefully look to sell it in a, you know, a booming uranium market. So you know, I'd say, you know, that within the next 5 years. I think maybe this is a good segue into just a little bit of commentary on the uranium market, but I know you've had lots of guests on that are bulls like me and are in this industry. But yeah, I think this is you know, having now been running the company, building it up with our team over the last 10 years, we've seen the good, the bad, and the ugly in the market. And I truly, I'm as bullish on it as I've ever been, no question about that. And I think right now the biggest thing that, you know, isn't maybe getting enough airtime is, I mean, people are talking about it, but just the disconnect between the equity prices and valuations and the commodity itself. You know, we're trading the uranium price trading in the mid 50s, but the underlying fundamentals are as strong as they've ever been. We're seeing, you know, the sentiment around nuclear energy continue to improve. You know, there've been a number of conferences recently, and you know, look, this industry, I think, is going to enter into a big boom phase here over the coming years. It's the only source of emissions-free electricity generation, baseload, safe, reliable, affordable. And with the advent of SMRs and some of these advanced new nuclear technologies, this kind of almost rebranding, if you will, and is I think going to really catch on. And I think the SMR market, it's an emerging market, but that could be the equivalent to what the electric vehicle was for lithium and battery metal demand for uranium going forward. I think it's going to have a major impact, and it's not really priced into the market at all, right? You know, that's something to look forward to. But, you know, if you look at just the kind of the basic supply demand fundamentals, you have a major supply deficit right now, you know, 140 to 145 million pounds of primary mine supply in the backdrop of 190 plus million pounds of annual demand. So you know, the market is primed right now for kind of like what we saw, I think, in the mid 2000s, a breakout from the mid 50s here. And, you know, you couple that with the new contracting cycle, new utility procurement cycle. We've already seen just shy of 120 million pounds contracted this year, almost already at the number, the volumes contracted last year. So we're closing in on that replacement rate, about 180 million pounds. And anytime we see 180 plus million pounds contracted, there's it usually corresponds with a pretty rapid move higher in the uranium price. US utilities in particular are low on inventories. You've got underfeeding to overfeeding. You've you know, the list goes on, right? You know, I'm sure lots of the other people that have been on have gone through all of these kind of bullish cases or factors. But I think the key thing here is to, you know, address the fact that, yeah, the equities, with the exception of, you know, Cameco and some of the larger cap names, right? You know, the smaller cap and mid cap names, you know, have you know, are lagging the commodity and lagging the larger cap companies. That is, in my mind, always an opportunity in the mining and resource space when you see that, because, you know, assuming that thesis continues to play out, the macro thesis, which I think it will, you know, that money that is being made with the larger cap names or direct exposure to the commodity eventually recycles and trickles down to the smaller cap and mid cap names. And that's where, you know, there's a lot more leverage and torque. And I think right now in particular, given that the uranium prices continue to tick higher, the equities of, you know, smaller and mid caps, you know, kind of stagnated. Mind you, it is the middle of summer. You know, I purchased more shares, and I just see there being some of the strongest value out there that I've seen, given all of these factors. So yeah, so you know, that's just kind of one final note I'd say on the market. I do think, needless to say, I think we're going to see much higher uranium prices, and we will see that translate to higher share prices, especially as the smaller and mid cap names catch up to some of the larger caps.
Agreed 100%. Our time is coming. Jordan, thank you very much for this interview. I hope we will catch up sometime soon again.
Thank you very much. We'll chat soon. I appreciate you taking the time.
Thank you very much.